कहाँ गए रिटर्न्स?
चले गए, लेकिन जा जाके कहाँ जाएंगे? इस बार मिले तो छोड़ेंगे नहीं उन्हें।
इन्वेस्टर्स, तुम मुझे वहां ढूंढ रहे हो और मैं तुम्हारा यहां इंतजार कर रही हूं।
Hey folks, see Rachana Ranade here and I welcome you all to a very interesting video which is about bonds. And I'm sure that when you saw the pre-bumper, you could have very well related yourself with the pre-bumper, because the moment we talk about searching for good returns, we either talk about searching returns through the stock market, or it could be through cryptos, or it could be through mutual funds maybe. But many a times we ignore one asset class, which is bonds. So if you want to know how to get benefited by investing in bonds, check out the full video. So now let's understand what's a bond, and very important, why do companies issue bonds with the help of a very simple example. Okay, now assume this is a company and it wants to raise money. What could be possibility number one? Very simple. Company says that we'll come up with an IPO or we'll come up with an FPO. FPO is a further public offer. They'll raise money from whom? People like you and me. So what happens in this case? That company issues shares and in return they get money. Simple. But what is the drawback here? Drawback is that the promoter's holding will drop. Remember, when we do IPO videos, we talk about such table where pre-IPO holding is this much and post-IPO holding is this much. In simple words, can I say the ownership of the promoters that gets diluted after issuing fresh shares? And assume that the promoters of this company don't want that to happen, and that is why they say first option is gone. We don't want to raise money through equity. What can be possibility number two? Company wants to raise money, then they go to a bank. Now what can bank say? Bank can say that, okay, we will lend you a loan provided that a lot of terms and conditions are put, like your current ratio should be this much, liquidity ratio should be this much should be the minimum security that you should keep with ourselves, and whatnot. Loads and loads of conditions are put up. In addition to that, the rate of interest which bank is offering to this company is also a shade higher. And that's the reason why this company says, no, let's not take a loan from the bank as well. What is another possibility? Another possibility is that company says, we'll take money again from people like you and me, but this time the company says, we are not going to make you the owners of our company. We are not going to issue shares to you, but we will issue you an instrument wherein we will take a fixed amount of money from you and we will repay a fixed amount of money to you. The tenure of raising funds is fixed. The rate of interest which will be provided by the company to these people is also fixed. And as I mentioned, the repayment of the entire money is also fixed. Now, in this case, what is the benefit to the company? The biggest benefit is that the rate of interest will be a shade lower as compared to raising money from the bank. What is the benefit to these people? By the way, these people could be called as the bond holders or the debenture holders. The biggest advantage is that they know that we are going to get this much percentage returns in the form of interest, even if the company is in profits or in losses. So I hope you have understood how a company can evaluate how can they raise money with the help of this simple example. Now let's try and address a very important point as to why should we invest in bonds. The very first reason is that you can get an opportunity to get fair enough returns. Returns in bonds can be as high as 9 to 11%. Now you might be like, why is Rachana saying as high as 9 to 11%? Isn't it beating inflation? So I can say bond returns are definitely lower as compared to stock market expected returns, but are surely higher than the FD returns, right? So the very first reason why we can think of investing in bonds is a possibility of gaining higher returns. Number two, certainty. Now, if I were to invest in stock market, do I have a certain cash flow? No, I might have some capital gains. Sometimes I might have a capital loss. Even if I talk about dividends, I'm not sure whether I'll be getting dividends every year or not. But if I've invested in bonds, I'm sure that I'm going to get X percentage of interest and I'm going to get this much returns from that bond every single year, right? But does it mean that there can't be any default in bonds? No, that can surely happen. But then how do I check whether the probability of default is at least on a lower side or not? For that, we can check out the ratings from the various credit rating agencies. Just to give you a simple example, if a bond is A plus rated, then ICRA says that A plus falls in the middle of the investment grade category and it indicates some but low credit risk. So I hope you have understood what is the meaning of A plus. And one final reason why I believe everyone should invest in bond markets, because we get a seat on a big table. Now what do we mean by that? All these big people, all these big corporate houses, they do invest in bonds. You don't believe me? Have a look at this. See, this is ITC's balance sheet. This is their investment schedule. And here you can see that they have invested 1,453.34 crore rupees in bonds and debentures. Now, if you check, this is the balance sheet of Reliance Industries. Again, a snapshot. But here you can see they have invested 3,550 crore rupees in bonds and debentures. If these big corporate houses are investing, why shouldn't people like you and me think of investing in bonds? Are you getting my point? Yes. Okay. Now, if you were to compare this bonds or the entire bond market with stock market, let's try and analyze how is the situation in India and how is the situation in US. Now, if I were to compare US first, the US bond market stands at $46 trillion and their bond and their stock market stands at $53 trillion. In simple words, I can say that their bond market is almost 87% of the total stock market size. That is US. Now let's come to India. The Indian stock market versus Indian bond market, if I compare that, Indian bond market is barely 58% of the entire Indian stock market. In simple words, can I say there's a lot of headroom left for the bond market to grow? Yes. Right now, the entire bond market is dominated by more and more of institutional players or specific mutual fund investors, but not more by people like you and me. So I think it's a great opportunity to invest in bond market and get greater returns, get certain certainty of cash flows, and also get a chance to sit on the big table. But wait, the big question is, if I were to invest in bond market, how can I participate in the bond market? To know that, check out the next section of the video. Now let's try and understand how to invest in bonds. See, possibility number one can be investing in bonds indirectly by investing through a debt mutual funds. Or possibility number two can be investing directly in bonds through various platforms, something like Wind Wealth. In fact, I believe Wind Wealth needs no introduction because till date, even I have made 3-4 videos on Wind Wealth, and I personally have also invested my funds through the Wind Wealth platform, and my experience while investing through Wind Wealth has been really good. Wind Wealth right now is coming up with another new issue, which is Oxiso NCD. It's an issue which is coming up in March 2022. Now, if I decide that okay, I'm going to invest in this issue, okay, I first try to see which NBFC is issuing this bond. Okay, I try to see the financials of the NBFC, and if I feel okay, I'm comfortable with this, then I get more convinced to go ahead and buy the bonds of that specific NBFC. I'll give you the example of Oxiso NCD. It is brought to you by Oxiso Financial Services Private Limited, which is a subsidiary of OFB Tech Private Limited. Now, to be really honest, even I did not know about this NBFC before doing this video, but it is backed by famous investors like SoftBank, Tiger Global, Matrix Partners, Norwest Venture Partners, and there are many more famous investors who are the investors in the parent company. So number one, what is the conviction I get? Okay, famous investors are investing in this NBFC. But does this mean that it is good? No, wait. Let's also check the financials for that. Now, which are the first 2-3 parameters that I should check? Number one, you have to check what is the net worth. Is it growing or not? Higher the better. If it is growing, it is better. Number two, you can also check AUM. What is AUM? Assets under management. Higher the better. If it is growing, it is better. Number three, you can also check PAT, profit after tax. Number four, you can also check what is the NPA status, that is a non-performing status. Higher the better. Here, the rule will be lower the better. So with these basic points in your mind, let's check the stats for Oxiso Financial Services. Now, if you see the data from financial year 19 to financial year 22, that's the 9-month ended data, you can see that net worth has been continuously increasing. AUM, that is assets under management, have also been continuously increasing. PAT, that is profit after tax, is continuously increasing. In fact, I'll just quickly share the CAGR, that is compounded annual growth rates of all these three parameters from 2019 to 2021. Net worth has grown at 109.66%, AUM has grown at 94.26%, and PAT has grown at 214.03%. All indicate very good growth. Now, if you see net profit margin, that has also continuously increased from 9.55% to 23.44%. What about debt to equity ratio? It is at 3.29%, 3.29x, I mean, high, but not very alarming as such. If I go to gross NPA and net NPA now, very important. Is this like higher the better? No, it's lower the better. But if you see, unfortunately, the NPA has been increasing at the highest point at which we are right now. GNPA is at 1.57%. Now, does this scare me? To get a solution for that, I will have to compare the gross NPA of this NBFC with some other NBFC. Simple example can be Bajaj Finance. The Bajaj Finance GNPA is around 1.54%, and the GNPA for this NBFC is what? 1.57%. So am I scared? Answer is no. So if GNPA is within limits, I can say net NPA also I'm comfortable with. And coming to the final one, CRAR, the current CRAR is reducing. It is at 25.23% right now, but still I'm not bothered about this because the RBI benchmark for that is just 15%. So I believe that if I were to check the financials, all in all, am I happy with the financials? Yes, I believe nothing to worry as such. Okay. Now, any additional points that I could check? So if Wind Wealth is coming up with, is offering these bonds to people like you and me, have they done anything as a value add for people like you and me? Now, what Wind Wealth has done, they have added few more covenants wherein they say that we are going to cherry pick the loans, we are going to cherry pick the assets. Means what? I'll give you a simple example. They say they have put one covenant as PAR, that is portfolio at risk. Now, what do they mean by this? They say that if there are any loans which are overdue for more than 90 days, we are not comfortable with that. We allow maximum PAR at 4%. So out of loans which are overdue, only 4% loans can be such which are overdue for more than 90 days. Simple. So lower this percentage, better it is, and they are allowing only at 4%. Going on to one more example of a covenant, they say that the asset pool should be 60% secured. Now, I'll give you a simple thought process behind this. This NBFC is issuing working capital loans. Okay. Now, these working capital loans could be what? They could be secured or they could be unsecured. Okay. Pay attention. What? This NBFC, Oxiso, they are offering loans like working capital loans. These could be secured or these could be unsecured. Now, this NBFC has issued, let us say, loans worth rupees 36 crores. Okay. Are these assets? Yes. Now they are issuing bonds. Bonds worth how much? 30 crores. Now wait. Against 30 crore bonds, how much is the asset backing? Asset backing is of 36 crore rupees. Now what Wind Wealth is saying is that, okay, agreed, we have taken these bonds of 30 crores, but these bonds are backed by what? Secured loans as well as unsecured loans. Now, Wind Wealth has put a covenant which says that the asset pool should be 60% secured. So, even if it is mix of secured and unsecured, how much should be the secured component? It has to be 60%. Well, as on December 2021, the secured book of the NBFC is 75.96%. So, is it well above what is the Wind Wealth requirement? Yes. And also, Wind Wealth has said that just in case if it drops below 60%, you have to replace the unsecured loans with more secured loans in our basket, and you have to meet the 60% criteria. I hope you have gotten enough information about this issue, but if you want to check more on the issue details, just keep on watching the video in the next section. Let's move ahead and have a look at the issue details of Oxiso NCD March 2022. The issue has a maturity of 2 years and XIRR of 9.5%. Now, if you want to know what is XIRR, I have made a separate video on it and I'll put the link at the end of this video. There will be an annual interest payment and you'll receive the principal investment at the end of 2 years, that is on maturity. The minimum investment amount is just rupees 10,000 and the issue size is of 30 crore rupees. As I always say, if you want to diversify your portfolio, if you want to try newer and newer options, I think minimum investment of just 10,000 rupees can suit the purpose of many investors. So if you want, you can just try out this option with just 10,000 rupees minimum investment. Now, it's an asset-backed issue where the majority of assets are working capital loans, which includes secured as well as unsecured loans. The collateral size is 1.2x, and this means that for an issue size of 30 crores, the asset pool is of 36 crores. The NBFC has a A plus rating, and now you already know what that means, right? So after reading the offer document, now let's go ahead and click on Invest Now. There'll be a few pop-up screens explaining you a few risks you must know before you invest. Read them thoroughly, check the I understand option, and then only move forward. Here you will see your investment summary. So check the details before you make the payment. Okay, now you can see your payment method, UPI or bank transfer. We'll go through the UPI. You can enter either your UPI ID or scan the QR code to make the payment. And yes, here it says that your payment for the issue has been successfully processed. These bonds are unlisted but can be seen in your demat account in a few days. As the bonds are not listed, they cannot be sold on the exchange, but you can notify your intention to sell to Vint Wealth and they will put you on the wait list where you can find a buyer. Well, I hope now you are convinced that investing in bonds is a big game and that you can earn fair enough returns by investing in bonds. But does that mean that you are going to liquidate all your stock market investments and going to put everything in bond market? Answer is no. You have to have a diversified and a balanced portfolio. So if you want to learn more about senior secured bonds, you can click here. And if you want to know more about XIRR, you can click here. Till then, take care. Jai Hind and bye-bye.